You're watching the 700 Club, and I want you to know we're so grateful that you're with us, and it's a wonderful time to be together. Well, you know, 2020 is coming to a close, and so is the deadline for making charitable contributions that you can report on this year's tax return. The more you give, the more you'll be able to deduct, and the more money you can get back from the IRS. Well, joining us now is CBN's Director of Planned Giving, Frank Nico. And Frank, let me ask you, in the simplest terms, just tell the partners what a charitable donation will do to their tax return.
Okay, good morning, Pat. Yeah, there are three main focus areas when deciding on maximizing charitable giving while maximizing also the charitable deduction. And those three areas would be appreciated investments, cash, and retirement plans.
Well, let's go to appreciated investments. Now, if you've got stock and you sell it, you're either going to have short-term gain or long-term capital gains, but you will pay tax on it. But if you take that stock as appreciated and you give it away, what happens then?
Yeah, that's a great question, Pat, especially during this time when the market has hit all-time record highs and the economic future outlook is uncertain. You want to select a highly appreciated stock, one that you've held for longer than 1 year, and you can then donate that stock through a wire transfer from the donor's broker to the charity's broker. And there's two benefits that come with that. You get a itemized deduction if you're in position to itemize at the stock's market value, and then you're able to bypass the capital gains tax, which is a tax on the profit.
Well, that's not too bad an idea. And have there been any significant changes in the tax code for 2020?
Yes, there has, Pat. In fact, let me go back to 2017 when the tax cut there, that act that took place a couple years ago. What it ended up doing, it actually made it more difficult to get tax deductions for charitable giving. But in 2020, there were two acts that were passed, the CARES Act and the SECURE Act. So they created some opportunity to increase charitable giving. And let me now talk about the cash donations, and under the CARES Act, what was provided. There's 3 points. One, taxpayers can now give up to $300 while they're taking a standard deduction. There's no need to itemize deductions to reduce their tax liability. A second one, for those who do itemize deductions, they can deduct up to 100% of adjusted gross income for cash donations. And then a third would be for corporations, that they can now deduct up to 25% of taxable income.
I understand also they made a provision that you used to have to pay down from your IRA, and they made it a little bit easier, but you can also give money from an IRA.
Right. And what happened there, and this again related to these two acts, they made some changes to retirement plans. So one of the changes was under the CARES Act, the RMD, which is called Required Minimum Distribution. And seniors, when they're in retirement and in their 70s, they're required to take taxable distributions. Well, in this year for 2020, they waived that RMD requirement. And then under the SECURE Act that was passed earlier in the year, they ended up delaying the age when you have to start taking those RMDs to 72. It had been 70 and a half. But the good thing is there's what's called a QCD, a Qualified Charitable Distribution. And that is a vehicle to take out of the IRA tax-free if it goes directly to the charity. So that is probably one of the smartest and most tax-efficient ways for seniors that are 70 and a half or older to withdraw funds from their either traditional IRA or inherited IRA.
Well, now, that could be a pretty good deal because people build up a lot of money in those IRAs and they're afraid of tax liability. So you're saying that under the new act that they can actually take money from an IRA and give it to a charity and no tax liability whatsoever, right?
Yeah, that's called a QCD. It's also known as a charitable IRA, but it's a qualified charitable distribution. So when you take that withdrawal, it has to go directly to the charity, and it's an above-the-line tax exclusion. And so even for those seniors, it's really a great incentive when you're taking the standard deduction because you get to deduct this and reduce your adjusted gross income.
Well, Frank, I just want to let our partners know how to get hold of you. You're a strategist in this. You can help them. How do they get hold of Frank Nico?
Well, they could call the Plan Giving Department at 800-333-2373, or they can email plangiving@cbn.org. I also have on the cbnlegacy.org website a handout that details many of these tax advantages and much more that I did not take the opportunity to talk about today.
Well, Frank, I appreciate it so much, and I encourage you. Folks, there's some good things, I mean, especially with appreciated stock. I mean, if your stocks run up, you can take a few shares. I mean, say you got 10,000 shares or something, you could give a few hundred shares of appreciated stock, and you can get a deduction for it, but you don't pay any capital gains. So, again, there it is. And December the 31st is the cutoff day on most of this. It's 1-800-333-2373. Frank Nico is a good guy.